Hello everyone, welcome to today's video. Today we'll talk about diversification in mutual funds and why is it important. So we'll talk about three basic things. First, what is diversification? The second one is why do you need diversification? The third point that we'll talk about is where do you need to do diversification? So the first one, what is diversification? We all keep talking about diversification is important and mutual funds help you diversify your portfolio. See, diversification is very simple, and I'll give you an example outside of the mutual fund industry. Now, think of a retailer like Zara. What they do every season is that they produce a lot of different styles, right? And the reason they do it is because they don't know which style is actually going to work out with the customer. So they produce a lot of different style based on their understanding of the past trends, etc., and then they release it in the market. Once they start seeing which of the styles are actually working, they start to actually over index on those styles. Now that is diversification. Now to the second part, right? Now why is diversification is important? Diversification is important because you don't want to take concentrated bets, as I mentioned earlier. Taking concentrated bets when you do not have a great understanding of how to pick stocks in the share market is actually risking your money. So you do not want to do that. And I'll show you that with the help of an example. And the company that I'll pick for that example is a very famous company, and that's ITC. And I'll show how ITC, if you had picked as a stock, which is fundamentally fantastic stock, you actually would not have made a lot of money even in a period of 5 years, which is a very long term period. And if you had stayed invested in that stock during that duration, you would have actually made zero returns. Now that is scary. And hence, so let's talk about the example of ITC. Now look at the graph of this stock, right? How it has gone up in the recent past. But if you talk about the period from September 2014 to September 2019, then what do you really see? What you see is that the stock actually made you zero returns. Now, fundamentally, ITC is a great stock. You would have thought that I invest this money and ITC is diversifying into the FMCG business. They are doing a lot of great things and hence I will make good returns. It would have been a very solid thinking on your part, but the actual story is very, very different and hence diversification helps. So, ideally, what you could have done as a beginner in the stock market or even an intermediate person in the stock market is you could have put your money instead of just in a stock like ITC, you could have put it in a Nifty 50 mutual fund or like a large cap mutual fund of various different AMCs, right? That's the reason that you diversify, because you want to reduce your risk and you want to increase your chances of returns in the market. Now let's talk about the third part. Where do you really need this concept of diversification? Where do you need to apply it? Do you need to apply it in all mutual funds? Because equity mutual funds are of at least four different kinds, right? First is large cap equity. The second one is mid cap. The third one is small cap. And the fourth one is hybrid. Now, what I would say, at least as a basic rule of thumb, is large caps are in general very, very safe. Now, I know that I did take an example of ITC and I'm slightly contradicting myself, but all I'm saying is instead of going for large cap mutual funds, you don't need to apply a lot of brains. What you can do is just perhaps invest in a Nifty 50 index, which is quite representative of a lot of large cap stocks, and that itself will diversify, right? You don't need a fund manager to really pick your stocks if you are investing in large cap. In mid cap and small cap, where let's say the companies are upcoming, like their business model is something that still needs to be tested, their growth needs to be tested, that is where you really need to diversify, and hence you should look for buying mutual funds in that space and not take concentrated bets on stock in that space for sure. So look for small caps and mid cap mutual funds from companies like Aditya Birla, Axis, Quant, Nippon. Some of these are great example of AMCs who have small cap and mid cap funds, which can help you really diversify your portfolio in those spaces and give you a lot of good returns, right?